Our guest host today, Alpesh Patel, is a principal at Prefinium Group and joins us now. And Alpesh, we're going to talk all about your new group and tell us exactly what you're doing in a few moments' time. Sure. But if you'll bear with us, we'll get straight out now to Paul. We've mentioned from our guest host today, Alpesh Patel, earlier on. Alpesh, you've changed the name of the company that you're at now, Prefinium. It has subsumed your previous group, hasn't it, Agile?
Precisely.
Tell us a little bit about Prefinium and what space of the market you're in, then we'll talk a bit about strategy.
Absolutely. Well, Agile was focusing on the UK markets and global equities. That's now been subsumed, as you mentioned, into the bigger group. The bigger group has total assets under management of $1.2 billion, and we invest in Asian markets, principally in India at the moment, into Africa as well as a separate part of the group, and into Russia, as well as the Western markets as well. So there's different divisions within there, and I'm one of the principals looking forward to expanding that out.
Sure. Well, how's it been? I mean, this has been an incredibly tough few weeks for all practitioners. Hugh Hendry sitting in your spot yesterday has had a very hard time, has indeed had a lot of people in the hedge fund space. How's it been for you guys? I mean, what have you been doing that's more nimble, or what haven't you been getting right?
We've been fortunate in one particular regard, which is we'd already raised the capital. So this isn't a fantastic market in which to go out to raise capital from the Western markets, but the second thing that we've been doing right is we've not been looking to the States to raise capital. We've got it from the Middle East. And if anything, given what's happening at the moment, when you've got a diverse group which can access the Indian markets, the African markets, the Russian markets, then you've got people who are willing always to invest into those areas where they're not seeing the same degree of volatility. So we're able to, again, you mentioned being nimble, we can actually offer a broader range than just somebody who's looking westwards.
There's quite a large assumption, if I may say, in there as well, in saying that you think that there's a certain amount of insulation with Asian investors. You mentioned Indian investors, which is one of your expertise areas, compared with the US. You've made a clear delineation between the two. Now, everyone's looking for the contagion around the globe. There have been stories about Asian banks with subprime exposure, but as far as you can see, a lot of investors, a majority of investors perhaps in India and elsewhere in Asia, actually aren't having to raise money in the US. It's actually local funding which is driving it.
Yeah, absolutely. Not just local to the Asian markets, but of course a heck of a lot of Middle Eastern money, not least because the oil price has been at the level it's been at for the last couple of years, and so there's a lot of wealth which is looking to access these markets. But also you just go back to fundamentals, which is we're multi-asset. So we're not just looking at investing in the liquid capital markets, but we're looking at investing into private equity, into venture capital, and it's diverse right across the board. And that gives us the opportunity when we see volatility in one asset class to spread things around and focus on other areas.
Are we at a structural point, a culmination of the difference between Asia and US in the fact that the US is now going to continue to diminish as the world's funding source, and Asia is going to continue? I mean, I know you are a great advocate of Asian investment, but can Asia do it without the United States and continue to raise money more locally in local markets, whether it be Mumbai or indeed Hong Kong?
Well, whilst we've seen that happen more than at any point in recent history, let us not forget the US is virtually 10 times larger than the second closest economy. So we've got a huge difference between how big the US is and the rest of the world. So we don't want to neglect the US, and equally it's US liquidity which is funding a lot of global growth at the same time. However, the influence and the reliance upon US growth is gradually diminishing, but we mustn't overestimate the rate at which that's happening. What makes more sense now than ever before is actually to have exposure to those other regions, because they're not necessarily always highly correlated, certainly when they've got local growth and local stories. So that decoupling in terms of correlation has allowed people to accumulate wealth through having exposure to different regions.
You know, Alpesh, I mean, when we talk about the US and we talk about the financials, some of these declines in the finance have been quite staggering. Bear Stearns down 37% over the last 8 weeks. Lehman's by a similar margin. Goldman's down 27%. Whilst we're not talking about vulture funds here trying to prey on these look like these valuations have come off multi-billion-dollar reductions in their market cap. There's got to be a lot of opportunity here, isn't there?
You've got to be careful. I mean, yes, you're right. At the top level, when you look at some of these figures, but look at the Dow. The Dow is at a level today which still is higher than any previous year in history that it's been at. Can't say the same for the FTSE. The FTSE is trading at around 1998 levels. It hasn't moved anywhere effectively in the last 9 years. But the Dow, on a yearly basis, is still at an all-time high. It's only, what, 6-7% off its highs? So, yes, there's some opportunities, but they're certainly not off the back of prices having overextended to the downside. That's perhaps a bit too much to say at this stage, even though the volatility and the pace at which they've dropped off in recent weeks has been significant.
Alpesh, we've got your company for the best part of the next 2 hours. Just a leaving point for now, though. Give us one strategy idea that investors can get their teeth into.
Again, go back to uncorrelated asset classes across the globe. So make sure you've got exposure to the Far East, the Middle East, into Europe and into the US. That has been a strategy which has always accumulated wealth over long periods of time. And somebody won a Nobel Prize for that, actually, would you believe?
Alpesh, thank you very much indeed. Alpesh Patel from Prefinium Group. Any questions for Alpesh, please send them in. Squawboxeurope@cnbc.com.